Good afternoon, apes. I'm Adriana Moss with Ape Nation News, bringing you today's critical market updates affecting AMC Entertainment Holdings. We're tracking significant developments in the entertainment sector this week, with AMC stock experiencing notable volatility as the company continues navigating post-pandemic recovery challenges and investor sentiment shifts. Our research team has uncovered important catalysts that could impact your positions, and we'll break down exactly what's happening and what it means for retail investors like us. Stay tuned as we dive into the numbers and analysis you need to make informed decisions about the world's favorite meme stock.
Thanks, Adriana. I'm Sarah Chen, reporting live from our Financial Analysis Center. We're examining AMC's recent quarterly projections and how institutional investors are positioning themselves around the company's debt restructuring efforts. The latest filings reveal crucial information about theater attendance trends and streaming competition impact. Revenue streams are showing mixed signals, with premium format movies and special events driving stronger margins compared to standard ticket sales. What really caught our attention is how ceiling prices in major metropolitan markets are affecting per capita spending patterns. Behind me, you can see our data terminals tracking real-time trading patterns. Insiders have reduced their positions in recent weeks, which typically signals management's perspective on near-term valuation levels. However, the short interest data tells a different story entirely, with key technical levels showing strong support from retail investors who understand AMC's intrinsic value in entertainment distribution. The options market is pricing in significant implied volatility, suggesting major moves ahead. Analysts disagree on whether this represents opportunity or warning. What's fascinating is how the ape community continues to defend their thesis despite mainstream criticism. Social media sentiment analysis from our team shows conviction actually strengthened during recent dips. Institutional shareholders are watching closely to see if retail investors will hold through another quarterly earnings announcement. The disconnect between insider moves and retail conviction creates an interesting dynamic that frankly hasn't existed in traditional equities. Back to you in the studio, Adriana.
Excellent reporting from Sarah. Now, shifting focus to AMC's strategic partnerships and content deals. The company announced new agreements with streaming platforms to distribute exclusive theatrical releases, a move designed to drive foot traffic and create urgency around in-theater experiences. These partnerships represent management's strategy to differentiate AMC theaters from competing entertainment options at home. The ape community should understand how these deals affect both revenue and shareholder equity value. Wendy, you've been investigating these partnerships and what they mean for our investment thesis.
Thank you, Adriana. Wendy Phillips here from the Marketing and Brand Analysis Desk. I've reviewed the specifics of these streaming partnerships, and they're more strategic than typical licensing agreements. AMC is essentially creating a windowed release structure where theatrical exclusivity periods are shortened, but premium formats get extended theatrical runs for first window content. This actually strengthens AMC's negotiating position with studios because they're becoming the gateway to premium distribution. The economics look favorable, but execution risk remains elevated given the volatile market environment we're operating in. What interests us most is the margin profile of these arrangements. Higher ticket prices for premium experiences combined with reduced competition from home viewing in the critical first weeks means better profitability per screen. The real money flows from franchises, Marvel, DC, and tentpole releases, where first window theatrical exclusivity commands premium pricing. Apes understand that AMC's ability to monetize this scarcity creates real economic value. I'm watching several metrics closely to validate whether these partnerships are moving the needle on occupancy rates and average ticket prices, which remain critical to the investment thesis. The broader context matters too. Legacy studios are finally accepting that theatrical distribution provides genuine value for premium content. This reversal of the pandemic-era streaming-first mentality should benefit AMC significantly. However, independent films and lower-budget productions continue exploiting direct-to-streaming economics, which fragments content distribution. AMC's strategy correctly focuses on high-value theatrical experiences where their venues add measurable value. From an investor perspective, this positioning should reduce long-term existential risk to the business model. Reporting live, I'm Wendy Phillips. Back to you, Adriana.
Thank you, Wendy. That wraps up today's Ape Nation news coverage of critical AMC developments. We've covered institutional positioning, management strategy, and the partnership landscape reshaping theatrical distribution. The message for our Ape community is clear. AMC is actively working to strengthen its competitive position and market share. As always, this is not financial advice. Do your own research and make decisions aligned with your risk tolerance and investment timeline. I'm Adriana Moss with Ape Nation News. Hit that like button, subscribe to stay updated on daily AMC coverage, and check out our partners at Neptime and Immute for additional market analysis tools. See you tomorrow, apes.